for the House of Representatives. Depending on the details, if only one of those actions is taken, markets will probably look past these rising U.S.-China tensions. If both measures are enacted, that might extend the decline we saw late yesterday. Not so much that they are drastic, but because the market is kind of priced for protection, and this would be a new set of headwinds that maybe they hadn't thought about for a while. From a worst case scenario, though, if the Chinese retaliate, like a tit for tat escalation we saw last summer, then stocks will probably go down. Also in the mix, Chinese foreign ministry rejected the president's offer to mediate the country's border dispute with India. So that didn't help the tone either. In domestic economic news, personal income in April surged 10.5%. Which is kind of interesting. There's a huge assist from the receipt of the economic recovery payments. Personal spending, though, plummeted 13.6%, although that was better than expected. The PCE price index fell 0.5%, while the core PCE price index, the one followed by the Fed for their inflation, dropped 0.4%, a little worse than the consensus of 0.3%. So there's no inflation anyway. Something else that was in that report, Kevin, the personal savings rate as a percentage of disposable income skyrocketed to 33%. So that's a lot of pent-up spending potential.
Sure.
However, it also might reflect a propensity to save money in preparation for a longer recovery, too.
I actually think it leans a little bit more that way. Myself, knowing what we've been hearing about of the consumers and the 40 million that are unemployed at this point, I think that's a little bit more likely. Just my speculation, though.
Yeah. Market is also going to watch Fed Chairman Powell. He's speaking with a group at Princeton starting at 11 a.m. Eastern, so right after our talk here today. Okay, let's go on to stocks in the news.
All right, Lee, where would you like to get going this morning?
AstraZeneca, AZN. All right, popped up 3%. They had a positive trial for one of their treatments for lung cancer, so that's good news.
Sure.
Yep, BIG, big lots. All right, they beat on earnings, stronger revenues, and raised guidance. So what is that? That is a triple play.
I'm going to ask our guys in the booth, Chris, Gabe, Andrew. We need some drops. That's the new thing we need for our show, Lee, is we need some audio drops to play and kind of spice things up here for you. So,
yeah. So, so I guess you got to watch the 10-day on this one.
It looks pretty good, Lee. This goes back to probably the same breakout that we've been talking about, April 6th around, right here off of this test of support. The 10-day, we've maybe come close to it, but we haven't come close to closing beneath the 10-day for a while. I would agree with you.
Yeah, let's go to the weekly. Make sure, is this an all-time high?
See what we have here. I'll add some links to this. No. But it is busting a long downtrend, Lee.
Yeah.
And this is pretty interesting stuff when you think about the time frame from support to me.
Right. So certainly improving chart here for sure. What did not have a triple play was Costco. It's kind of chopping around, kind of a choppy chart. The news on them was they did beat on earnings by 3 cents, but their revenues came in lighter than expected. No mention here on guidance. I guess you'd have to look at the 200-day, I would think, if you like it longer term on this. It has been holding that.
I definitely think so, Lee. This looks to me to be just consolidating up here. I mean, I could even extend the lines a little, and you're seeing this consolidation type triangle thing happen still. So it's remaining within this range. So I'd consider this, entirely range bound, and The one thing that I like is what it's done here in terms of the longer term RSI. It's not broken down at all. So what you're seeing is some levels you could base your position against. And I think for the short run, if you're long, you probably stick with it. But breaks of the triangle, one way or the other, are going to be pretty instructive.
Yes, indeed.
All right, Lee, what's up?
Salesforce.
All right. Saw that did not get off to the hot start this morning.
No, they beat by 1 cent. Inline revenues, but they lowered their guidance in the market. Didn't really like that. Although at least it's holding the 20-day on the pullback at the moment.
Let me hide my retracement ledge there. Oops, there we go. Yeah, came all the way back to the 20 here. Pretty good level to make sure to maintain. It has been support going back to that April 6 window.
Yeah, so we'll have to see if it breaks. You got support, your top green line there too.
Yep.
I think the key to how it acts around this, if it continues to weaken, that's going to suggest the move back down to 164. And if you like the company, that might be a place to add some exposure.
Yeah, I like that idea, Lee. Entry near 164 would be great if it did in fact break down. If you got any sort of indication that the market was going to maintain this level for you here, though, the 20 could really offer, for the shorter term trader, a pretty good area of support as well if the trend is going to continue.
Yeah, we got a question from Shelley in Colorado. Your neck of the woods there, Kev. What's the RSI telling us? There was a little bit of a divergence at that high yesterday. So I think the bigger deal, though, is you're pulling back to the 20 and you're not below the 50 on 50 level on the RSI, which I think is still bullish.
Yeah, I think I agree with that as well, Lee. And when you mention often that the divergence in RSI is something that can just bring you back to the most recent ledge of support, and that has clearly for about 6 weeks been the 20 SMA. The fact that you're sitting on the 20 SMA there, it should give the individual who wants to be owning Salesforce at this level plenty of reason to consider either establishing a position or putting in some stops, not necessarily below today's low, but I think if you look at this low right here from just 2 days back, that's 171.37. That would be a really big deal. If it broke, another dollar below that, below where it is right now, I think that traders would be more than willing to pull some of that off the table. And so that's that, this area right in here.
Yeah, I agree.
There. So I would keep an eye on that, everybody, depending on things here. I mean, I think you've got a way to either set your risk if you're looking to start a position, or if you've been long and you were looking for reasons to take some off the table, breaks below that, approximate range there that the 20 SMA would make a lot of sense, I think.
Yeah, good analysis. Dell Technologies, DELL.
I'm sorry, Lee. Was that this one?
Yeah.
All right. I forgot that they've updated their name.
Yep. They beat on earnings by 40 cents on stronger revenues, and the stock is acting finally like you would think something would on good news. It's always
Good, look at that. That's great, Lee. I haven't. There's. Just yesterday we were talking about the difficulty of taking out a 200-day moving average, weren't we?
Yep.
There's your first attempt at it, and granted, this has undergone some restructuring, of course. So this is a relatively new chart. But first test was failed. Second test failed aggressively, and then today you're finally back up above it. So yeah, again, given some opportunity to start to manage a position, establish a position, working against the 200 daily. I like the RSI as well.
Yeah, the RSI is acting in a bull market behavior. All the recent pullbacks didn't even get even close to 50 hardly. And yeah, I mean, it got down to 50, but not much lower. And now we are in overbought territory. That's bull market behavior. Probably a stop under the 200 in today's low if you want to trade it, I would think.
No argument here, Lee.
All right, let us take a look at Nordstrom's, JWN.
If I'm not mistaken, that didn't go well.
No, they missed hugely. They missed by $1.06. They lost 223 versus the estimates of 117. Weaker revenues. So they're like a lot of these retailers, like Kohl's. They're all kind of in this range. Like
Yeah.
like put up Kohl's. It kind of looks the same way.
Sure.
KSS. Yeah. So they have. They're in this range basically. They all kind of look like this.
Yeah, I was thinking the same thing, Lee. I mean, it's even the only ones that have changed that, Lee, are the ones that offer produce, is what I've noted.
Yeah.
Target and Walmart, they've got a little bit of a wider offering, as compared to Kohl's and even TJ Maxx. So, I mean, this one's actually done pretty well. So anyway, did you want to provide some numbers on that, Lee?
Uh,
Or did we? I'm sorry, did we get them?
yeah, we got them. All right, let's do Marvell, MRVL.
Okay.
Here we had a triple play. They beat by 4 cents, 18 cents versus 14 cents, stronger revenues, and they raise guidance.
That's some good stuff. Like this chart, Lee, the 10-day is aggressively upward sloping here. This has broken out of a major resistance spot here just in the last 2 weeks.
Yep.
So let's highlight that. And then if I throw this back to a weekly, you can see the imperative nature of that area, Lee. This is really, really nice to bust out of that 28.5. Looks really, really great. This is a very nice looking chart with some strength to it.
Yeah. What can you say?
I think that's it. We like strong charts when we get them. So that's certainly a nice looking chart. So in terms of levels, traders who are looking at this breakout spot, we often say, Lee, that you can anticipate a throwback to the breakout point. I don't want to say that this is, this is suggesting that you can anticipate a retracement to the 28.5 level, but moves back to 28.5, depending on how you get there, could be areas where traders are going to look to start positions again.
Yep. And again, when something moves like this, buy a little, and then if you do get those pullbacks to a reasonable support level, you add. But they can keep going, after a viable gap up. So
it's true, and often I have noted that the ones that rally insanely, the ones that go without stopping, are the ones I don't dabble in. Inevitably, the ones that retrace immediately are the ones that I go full position on. So I found that for my own emotional tie to my money and my investments, it's a lot easier just to take a little, see what happens, let it do its thing, and go from there.
Yep. All right. We got Twitter.
Okay. Yeah, Twitter was in the news, really.
Yeah, it's in the news. Not for financial stuff, but the president did sign that executive order to revoke Section 230 of the FCC code. They also blurred out one of his tweets in the unrest in Minneapolis. And they said it incited violence. So he's having a dispute with them. And how does he dispute them? On Twitter. I mean, it's
Indeed.
So anyway, I mean, it's in the news. Pull back to the 20-day. Probably you're going to get whipsawed on headlines on this one, though, I would think, with what's going on. But
yeah, I would think so too. But notice the other thing that stands out, Lee, is that the 20, while sound on a closing basis, it's been violated on a number of occasions. You could easily be shaken out here. So if you're averse to the headline risk that you mentioned, Lee, this you might have a little more volatility with this one than you may be comfy with. So I would think if you like it, great. Take some smaller positions and make sure you can manage them.
Yep. Ulta Beauty.
Okay.
ULTA.
Okay.
It looked like it it broke through the 200. We got a question. Is it, you take the same stock if it breaks through a 200, if it's sloped down? Yes. I think it's still
Uh,
constructive.
yeah, well, it's also a signal that the trend is reversing when it recaptures the longer term moving average. It's obviously we like it when it does so in an up, when the slope of the 200 is upward, but often in order to capture the 200, it's already downsloping on your first challenge or two. It takes some time to get that price action to
Yeah.
pick
So
up on a 10.5 month moving average.
yeah. So they missed badly. Uh, by $2.06. They were looking for a profit of 67 cents. They came in with a loss of $1.40 basically. And weaker revenues and comparative store sales are down 35%. So I mean, it's still making higher highs, higher lows, but I would feel better if it can take out the highs of the attempt through the 200 now. I think it may or may not do that with those.
Yeah, I think I'd agree with that.
Yeah, a little less than 260 you might want to do.
Okay, Lee,
All right.
you got another one on there for you?
Oh, I got plenty more here. We got
Good.
Viva Systems, VEEV. Viva la triple play. Okay, they beat by 10 cents. Stronger revenues and raised guidance.
Boy, I'll tell you, Lee, some trader had a heck of a move here, 183 to 217. Wow, look at that in 3 days.
Yeah.
Wow, what a major effort on Wednesday to bring this thing back and getting close to the 20 there. That is some impressive price
Yeah.
action, Lee.
Yeah, it looks like the 20 is what you might want to keep your eye on. The other way
Think
traders
so.
might play this, take a little bit, put your stop a little bit under those highs the last couple of days.
Yeah, I also think there's another ledge down there at about 177 with the 50-day. I think if let's take a quick peek here. I wonder if that was Oh, look at that.
Yeah.
That's some good stuff. All right, so another level here, perhaps at around 177 for longer term support.
Yeah.
So look at the chart.
Okie dokie. Williams Sonoma, WSM. They,
Well.
yeah. Well, I think this goes to show you that a lot of people were cooking. They said that some places couldn't even have stores are out of flour and everything. A lot of people were working
Mm-hmm.
in their kitchens, and I think it showed up in their sales. They had stronger revenues, and they beat by 69 cents. They were looking only for a nickel, and they made 74 cents. No issuance on guidance though, but could be a viable gap up. Is that an all-time high?
Yep.
Yeah,
I mean that. Oh, maybe not. Sorry, I didn't give it enough time. Pretty close.
pretty close. But that would
90 or
probably
so.
be the next target, the all-time high.
Yeah, that's pretty interesting though, Lee. We get a gap like that. A
Yeah,
lot
right
of
through
traders
that
would just put
resistance.
this. Yeah, I would
Yeah.
just put a support right now, right there, and just stop below the low and see how long it goes.
Yep.
That's how a lot of traders might look at that.
Yep. ZS.
Yeah, this thing was hot, wasn't it?
Yep.
Sure.
This was, wait for it, a triple play. If you want to know where that comes from, it's Bespoke Investments in New York City coined the phrase triple play. It means beat on revenues, beat on earnings, and raise guidance. So
Yeah, but they don't have the flair that you have, Lee.
I know. So they beat on earnings by 5 cents, stronger revenues, and raised guidance. Took out that high again. So
Wow. Yeah, looking really nice. That's a strong looking chart here again, Lee. But if I'm not mistaken, are they cloud company, right? So it does suggest at least that this is a bit more of a picker market, right? Because
Yeah.
whoops, we were talking about Salesforce. They've got a lot going on with the cloud too, and a lot of software is done very, very well. But you absolutely need to make sure you're picking the right one. It looks like so.
Yeah. That D rating on ZS means dandy from Schwab Equity Rating.
Going on.
Okay. Let's take a look at Halliburton. For what it's worth, they were downgraded at Cowen and Company to market perform from outperform.
Just like the energy chart, Lee, it's an improving chart.
Yep.
It's
trying to fill that gap.
Trying to fill the gap.
Almost did.
But
yeah.
Holding the 20 here. And, a lot of traders would continue to look at the 20 as support until it's no longer support.
That's right. Also, if you have any of the following stocks, if you have Amgen, Merck, Bristol Myers, Regeneron Pharmaceuticals, Eli Lilly or Gilead, or Pfizer or Seattle Genetics, you may want to pay attention to the news. We have the usually very highly watched American Society of Clinical Oncology meetings that are starting. They're doing it in a virtual format for the first time ever, but they usually get 40,000 healthcare professionals in there, and they have all sorts of presentations. So you should just be aware that you get some volatility based on what the companies present. So I just thought I would give you a heads up on that.
Good heads up.
Yeah.
Well, what do you say we take a peek at the S&P, Lee? Did we run through all of them for you today?
Yeah.
All right. So let's now we said we had a mixed bag to start us off. The NASDAQ was trying to show a little bit of happiness this morning, and we've already given it back. So here on the S&P, we are looking at our third day above the 200. It's a very important daily, at least in terms of the so-coined, thank you very much, Lee Bull, Horner rule. So we'll keep a close eye on the 200 and the S&P's ability to stay above 3,001 point. 3,000 is a very important level for a couple of reasons. Not only is it good support now that we've popped through it, it's also a mental hurdle for the market as well. So, I don't want to see us get back below the 200, so I'd prefer some buying stepping in here into the afternoon, which would be a little interesting. Again, we've had some interesting Fridays of late. We haven't seen a whole lot of, hey, sell everything into the weekend like we thought we might be getting of late. So, it's an interesting thing to keep an eye on here around this 3,000 level.
Yeah, the other thing I would say is we had a question on the last day of the last month on a Friday. Generally speaking, at least from our research that we do in our seasonality workshop, the last couple days of a month and the first 2 or 3 days of the new month tend to be a little stronger than average. It's not a huge edge though, but there's a little bit of strength.
Yeah.
Obviously today we're going to have headline risk. It depends, when that news conference comes out.
Yeah, headline risk is certainly something we're going to have to monitor today. This S1 level, certainly a big level. Keep a close eye on here today. I'd like to see us buy this up. You can see that we've halted right here at, I could even lower these to kind of come into the afternoon lows from Wednesday. And that kind of coincides quite well with that S1. So I think traders are looking to see this area right now bought up so we don't slide below that 3,000 point ledge. So It's a bit of a precarious spot, Lee. Everything has been really favorable. We do like what we've been getting from the RSI. We certainly wouldn't mind it pushing even a little higher, kind of validate the trend further. But we're going to have to hold the 200 for that to happen.
Mm-hmm.
So pretty simple.
Yeah. All right.
All right. Let's check that NASDAQ. So we got into the gap this week. We could be said that we even tested it here just yesterday. Had a really nice pop right to there. That high 95.23 yesterday. Low here was 95.42. So we did miss it by a good, 15, 18 points, I guess. But still our stronger of the indices, the 20 acting very well as support, as you can see. And yeah, I'd like to see that 20 hold as well. We are getting a little divergence here just this week with those highs, but that's kind of led us to meander a little bit here. So I think a lot of traders would be okay with a test of the 20-day. The thing though, Lee, is of course that's points. That's still 300 points away. Not going to feel good to give up 300 NASDAQ points.
No. Okay, let's check out the Russell, which had been outperforming a little bit.
Yeah, it's outperforming the other way today. Down by 1.25, so it's our leader lower here right now.
So it is
falling back into that range.
Yeah, it's flirting with trying to hold that support. That's pretty key where it is right now. I mean, right now it's a little under it. It's the close that'll tell the tale there, though. I mean, the only good news is that high was on a higher RSI from a day or so ago.
Yeah, see how, this is the low we were talking about just 2 days back. Tested that. So this is the line in the sand, at least for today, I would suggest.
Yeah.
Yeah, because then, moves below 1380, call into possibility 1353. And that would accelerate, of course. That would be a pretty good additional move. That'd be another 1.25%, 1.5% if it fell through that. So
yeah, so hopefully
we would obviously like to see this line held.
That's right. So, put up the S&P again. We have a question.
Sure.
Vis-a-vis the 200-day.
You want the S&P or do you want the spiders?
Well, it doesn't matter. Spider.
All right. Okay.
All right. So I have a question. Would you fade the first breakout? I don't know if you'd fade the breakout. You often fade the first attempt to get through it. That trade wouldn't have worked this time. But generally speaking, the first attempt at a pretty major level doesn't make it. So actually, this shows a little bit of more strength than you might imagine, the fact that it didn't do that. I mean, yeah, it pulled back a little the first time. You can see it, but 4 days ago, it went up and came back a little bit, but it certainly didn't have a huge pullback. So
very small pullback. I mean, as a trader, you'd have been, if you faded this test here on Tuesday and then got really excited when when it tested the breakout point here on the following day on Wednesday morning, and you had the chutzpah to buy that up, great. But that was very short-lived, wasn't it?
Yeah.
So I think that's an important area to keep an eye on. Even if we close below the 200 or get back below the 200, the lows of this week, in particular this low from Wednesday, 2970 approximately. I think that's a very important short-term ledge on the S&P.
Right. All right. Let's look at sector action, just see what's moving or not.
All right. So from an upward mobility, we're getting some SOX movement today, Lee.
Yeah, probably because of Marvell.
Yeah, I would think so. I wanted to put out the ETF that reflects the SOX here. So yeah, it's kind of a little bit. This is interesting because this looks a little bit like a flag. It's starting to get into that extended time frame. I'd like to see it already break, but boy, it moves above 250. I mean, you're going to start looking at those prior highs around 270 again.
Yeah, I mean, it is a strong looking chart, or it's not a weak chart, that's for sure.
Yeah.
So that would
The
be the key
RSI
level.
isn't necessarily foreshadowing the breakout at this point or anything
How
like
about
that, but
how about OVV? What's that doing?
yeah, let's see here. Looks a little like the chart.
Yeah, a little like the chart. Last time we made the high, the OBV was a little bit lower than the previous
Mm-hmm.
high, but on the other hand, it's out of that range. So, like you said, it's like the chart. It's not giving any insight one way or another.
Yeah, I think it's essentially range bound here. You've got a nice little 10-point range. The 20 has been pretty good along with it, and I think traders, would get a little less excitable below 240 and above 252, a lot more optimistic. And I think the trade, if you're looking to talk trade, is a breakout move as opposed to anything.
Explain what's going on with Twitter. It's so this has been a issue back and forth for quite a while. It's this talk about Section 230. Section 230 means that right now, so if you're a website and like kind of a social media type website, you are not responsible for the content that you don't place there yourself, that the users place.
Mm-hmm.
And if they revoke that, then the feeling is that you're opening the door. If you do post, or one of your users posts something that's really bad, then you now have now you are involved too, and that can add to lawsuits. So the risk is that they take away that first. Now they're saying it's unconstitutional, maybe what he's doing, because it's abridging First Amendment rights, but it does, if they take away that protection until it's challenged, you could have increased lawsuits for these companies that have their users post things. So, and there's been a lot of court cases back and forth on this issue for a long time anyway. As a matter of fact, my wife's a law professor, and she did she teaches legal writing, and one of her problems was about this. So, yeah.
That's pretty interesting.
Yeah. Yeah, so anyway, that
Um,
is the issue. It opens the door for lawsuits, but many constitutional scholars say it's an abridgment of free speech of the First Amendment, so it's unclear the longer term. But in the short term, it's not good, because until it gets challenged, that would be the rule. Yeah.
Lee, we had another question just real quickly from Alan regarding the Russell. Are you aware of the Russell getting reconstituted next month?
Well, yeah, they do their what, yearly balancing in June.
Yeah, I think that's
Yeah.
right. Is that, I mean, do they foreshadow that? Do they let us know, relatively well in advance, expectations or anything like that? Or is this something that could be expected to move the market, I think is essentially.
Uh, no, they give indications. I mean, we'll follow that for you.
Okay. Excellent. And I'll make sure that we are prepared to do just that. All right. Looking at the chart, or at the list here, Lee, a little bit of a bounce back in the Nasdaq here. Let's see. We're being, in terms of leadership today. One more time. So we talked about the semis a little bit, Nasdaq 100 a little bit, tech a little bit. Selling off the rallies in energy and financials and industrials that we really started hot with this week.
Yeah, so as we talked yesterday on charting the market, your rotation into value looks like it's over again.
Sorry for this. I I almost had a little spit take there. Yeah, it's weird. It's not. When we start talking rotation, these are things that usually last a while. This one lasted all of 24 hours.
Yeah. Couple days. Yeah, couple
Yeah. Well, 24 trade hours. I was thinking,
Yeah,
something like that. 3-4 days.
Yeah.
You see energy retreating to its 20 SMA. Industrials did break out from our ledge. There's a nice couple of gaps we got in here. Coming back to maybe test the breakout level on the industrials, but you can see, the money flow is favorable. It's an up slope, but it's not like people are pouring into this.
Yeah.
Quick
Yeah.
peek at the financials, we had talked about the absolute imperative nature of the financials to really get back into gear if we were going to continue to see the market rally. We talked about this level, very important. I'd like to see that. You can kind of tell that it's an important area, can't you, Lee? We got up in there yesterday and then it completely failed.
Yeah. So there's your fade, your first try at major resistance.
Good call out.
Working there.
Keep an eye on the 10 here. The reason I say that is you had a lovely 5-day consolidation on the 10 and a couple of gaps that look good. The 10 is going to slope up here pretty nicely, and then over the course of the next day or two, I think this 2270 level is an area to keep a close eye on short term.
Yeah, let's check out some ones that we've been stocking. Let's see if the home builders are still doing well.
You got it. Now, see, that's a slope in volume that I like to see.
Yeah.
So that looks a little bit better than something like the XLI that we were just looking at, which was essentially flat down there while the price of the action was going up.
Right.
So
Here
this
you
looks a
got a
little bit
nice,
more optimistic.
yeah, you got a nice pullback to support right at the 200 and right at horizontal resistance. I mean, you want to take a shot on the long side, you can set your risk really low on this one.
No kidding. Yeah, holding up pretty well there, Lee. Now that looks a little different, but I will just say that gap move, the gap ledge here, very important. Clearly, look at that real quick test there today. Like to see it get through the pivot to have any additional opportunity today, of course, but yeah, looking pretty favorable.
Yeah.
What else jumps out at you here? I know that, man, I've been watching and listening to a lot of people reiterate XLV or healthcare in general being the spot. It's really consolidated up here, though. It's not quite right now, at least not trending, is it?
No, where's the 20? I think we should screen in here too, because some of those, we'll just take a look at some of those names with that clinical oncology conference
Yeah,
too.
that's a good call. I think that's
Yeah.
a good idea, Lee. Let's take a peek here and see what we got. Oh, don't do that. No, don't do that. Oh, it did it. Oh, inevitable. I'm just going to change this to bullish. So, all right, healthcare. Let's see what we have to work with for criteria here, Lee. All right. So we do want last trade over 10. A's, B's. What technical condition did you like? The over the 20?
Yeah, and obviously take out the bottom technical one.
Yes, of course. Let's do that. Let's remove that. All right, so just pretty standard here.
0.
A's. I think that's
Something's
because I
not
don't
working.
have this.
Yeah, there you
Don't
go.
have that designated. There we go. All right, now we have 50. That's a lot.
So let's just look at A's,
Okay.
see what that does. There
All
we go.
right. Let me just do. And then I'll save this. And we'll talk a little bit about some of these. Yeah, so this range bound area here, Lee, is pretty intriguing.
It is.
97 to 102, so about a 5% range on it. Breaks out, could really move as well. Just a heads up, because that is a prior all-time high at 105. So pretty interesting, good list here, Lee. Any of the ones that you had noted that kind of stood out?
No, these are more in the looks like more healthcare management. There's not a lot of drug stocks in there.
No. And that's probably because of the ratings, I would venture to guess, Lee.
Yeah.
because it's difficult to give A's, I would think, A's to biotech right now.
Yeah. All right. Let's just take a look. Let's start with the big one, UNH.
All right, you got it.
Boy, watch this one for a breakout.
Yeah, it's tried, hasn't it?
It's tried. Has here's it's tried. And just put in.
Okay.
Yeah.
Does that give you a little bit of a lean, maybe?
Yes, that balanced volume is chugging right along.
Oh boy. No. Yeah, what a range. Holy cow, Lee.
Yeah, so
That's
yeah, if that breaks out, that'd be fun. It's probably not time to trade it yet, but watch for that breakout.
yeah, it's close. That is a pretty important ledge there at 300. I think this is one you want to keep on a watch list. And on a day where it shows the enthusiasm as it pops through that 305 area up towards 310, starts to make those new highs, if you get volume behind it on an intraday basis, that's when you start to pay close attention, because this thing could run in a heartbeat.
Yeah. Let's see. Let's look at McKesson.
I'd feel better if that OBV looked better. RSI looks fine.
Yeah.
But
You've got pretty good support though. Yeah, right in there, a little higher maybe. Yeah, right in there.
okay.
Yeah, so I mean, that's still a trade you could set up, a stop under that green line with the target of the old high. Got positive
Sure.
risk to reward.
Yeah. I mean, that old high ballparks to 171, 172. That's 17 points away. You could also use perhaps a shorter term moving average. The 10 is up sloping pretty well. And it's actually, that 10 has been great since it broke at around 140. So it's at 15 points. If you let the 10 slope come up into line here with this 152 breakout area, that should be interesting.
And with that, our time is up. What's coming up next, Kev?
Next up, we have regional investment strategist Mark Item, joined by Robert Kamek. They review how to make the most out of Schwab.com. Lee, you back a little bit later this afternoon at 1 Eastern for charting the market. Hang on. Charting the market.
There you go.